Now, the latest economic growth numbers have just dropped for the September quarter. Let's bring in Sky News business editor Ross Greenwood. What do they show, Ross?
They show they're just a little softer than what was predicted, but they are stronger than what they were in the previous quarter. The previous quarter, 1.8%. In this quarter, 2.1%. The prediction had been 2.2%. So this, of course, is important in regards to not just the future of interest rates, but potentially even for the government in regards to its own spending and its ability to afford it and the state of the budget going forward. We'll hear very shortly from the Treasurer, Jim Chalmers. Also, Ted O'Brien, the Shadow Treasurer, will be speaking about these numbers very, very shortly. The quarterly numbers have come in at 0.4%. Now, it is expected broadly that government spending is one of the big contributors to the economy's growth right now. Now, longer term, though, the stronger, as we heard earlier from Sherelle Murphy, the stronger that the economy grows, the more likely there is to be inflation. Last week, for the previous month, there was a surprise inflation rate. And so the real issue now is how fast can Australia's economy grow without creating that inflation? Of course, money markets have been now pretty much taking off the table any suggestion of interest rate cuts for at least the next 6 months, with many economists forecasting that the next move in interest rates could be up and not down. But let's have a look here at the state of Australia's economy. In June, it did pick up, but if you go back to September, the same quarter last year, it was growing at 0.3%, our economy. Now it's barely picked up from there at 0.4%, despite the fact that there have been 3 interest rate cuts from the Reserve Bank last year. So this is going to be troubling. But mind you, we've heard from Michelle Bullock, the Reserve Bank governor this morning, that the Reserve Bank will do what is necessary if inflation takes off. In other words, she's basically saying if we need to raise interest rates as a result of rising inflation, we will. So that's one key. The second aspect of this is Australia's economy right now and where basically this growth is coming from. Effectively, they're saying it's pretty much steady. It matches the average quarterly growth in the last period of time. GDP per capita was flat for the quarter. So that is effectively saying to you that per capita, Australia is pretty much flat going forward in terms of its growth. Productivity, however, has picked up, and also so too has the household savings ratio. Now, this is pretty important because consumers have been out there spending in the last period of time, and that household savings ratio, which effectively had been 6% previously, but in previous quarters down to 5%, has improved basically as a result of the lower interest rates we have experienced. The good news here is that productivity has picked up slightly. It has flatlined for a long, long period of time, and that means that there is actually some growth going on out there. So broadly, these are in line, slightly, a little bit lower than expectations, but the reality is that Australia's economic growth is stronger than it has been broadly on an annual basis over the past year or so, Kieran.
Ross, we've spoken in recent years about the public sector expenditure, how it's driving a lot of the growth and jobs creation. In the numbers here, where is the growth being generated?
Well, it is being generated by government spending. There is no doubt about that. But it's also, remember, that 50% of our economy is consumer spending. And so from that point of view, that is where it comes from. But here are the quarterly numbers for productivity. And you can see going back a year ago, productivity was going backwards. And so that really creates almost a constraint for the Reserve Bank to cut interest rates. They really can't do so unless productivity is much stronger than what it is right now. So even though in this September quarter it's 0.2%, 0.4% previously, it's encouraging that it's not going backwards as it had been in quarters before. So that's one good thing coming out of this. The second thing that you point about is the government itself. Now, the real issue here is that government spending has been growing faster than the economy has been growing. And so when you get that situation, you get a position whereby the government itself is almost creating the inflation. And this is something the government denies, of course. It says that's not true. That's not what's happening. It is what's happening. And so as a result of this, now you're starting to hear government talking about cutting back on jobs, trying to cut back again on its own spending. But that's pretty difficult when you've got schemes such as the NDIS, which quite clearly are way over budget and projected to grow even further into the future. when you've got big defence spending commitments which are still coming down the pipeline, when you've got childcare commitments coming down the pipeline. So all of this means that the budget position for Australia does deteriorate unless we can get Australia's economy growing faster. But right now, we can't depend on interest rate cuts to do that, because without the productivity, without, shall I say, the inflation coming back into the target band, there are going to be no interest rate cuts until those conditions prevail.
Ross, how has the market reacted to the number coming in a bit softer?
Yeah, let's have a look at this, because I'll be fascinated just as you are. We've got live numbers coming in for a range of different things. I want to show you the ASX 200 up sharply. So again, this is basically going into this. The markets were down and then has had a sharp turnaround. Now, the fact that you've seen that sharp turnaround suggests that maybe this is a little bit more benign for the Reserve Bank and interest rates. So that's what's that picking up. And I'd suggest to you that's property companies, that's banks, financials that are all up pretty strongly off the back of this number. If we go forward and we have a look again at the next chart, we can have a look at the Australian dollar. So the Australian dollar has fallen. So sitting up around 65.7, now down under 65, or close to 65.5. And that again gives an indication that there is more of a chance of interest rate cuts now than what there were before this. So this is seen to be a pretty benign economic growth number, I would suggest. And you can see these are live numbers actually moving in there.
Yeah.
So this is going to be interesting.
Thank you so much.
Yes, quite okay.
Yeah. No, carry on. Crack on,
I was going to show you one other thing, because this would be the interesting one for people. I want to show you the 1-year bond yield chart. This is interest rates on the money markets right now. You'll see here is a big fall in interest rates on money markets. And so that again is showing that this is a fairly, shall I say, soft number economically as compared with the forecasts. And as a result of that, the forecast for interest rate cuts perhaps in the future might be a little higher than what they had been before this number dropped. And you can see it there.
Ross Greenwood, thank you. Appreciate it.